So can you make money from inflation? The answer is yes, and we know that because of this guy here. This is Hugo Stinnes. He was a German industrialist who used inflation to become one of the richest men in the world. In this video, I'm going to talk about the strategies that Hugo Stinnes used, and also hypothesize how Stinnes could repeat his results today. But before all of that, we have to start with a little bit of economics history. The year is 1919. The dust of the First World War has just settled, and Germany stands in ruins. The German economy has massive war debts, and it's also laden with reparations payments agreed at the Treaty of Versailles. This leaves Germany owing around 132 billion marks, the equivalent to 262 billion US dollars today. Worse still, Germany had removed its currency from the gold standard to allow it to borrow more money to fund the war. Now, a gold standard is where your currency is linked to the price of gold. So you can literally take your note into a bank and exchange it for its face value in gold. Germany got rid of that and instead started using what's called a fiat currency. A fiat currency, fiat means trust. So it's a currency that is not backed by anything, but is instead backed by people's trust in the government. However, there was very little trust in Germany in 1919, meaning there were high levels of inflation. In addition to this, that foreign debt had to be paid off with foreign currency, and it was very difficult for the German government to finance that currency with the depreciating mark. This all comes to a head in late 1922, when the Germans failed to pay the French a reparation payment because they just can't afford it. France, with the aid of Belgium, in response, choose to occupy the Ruhr. The Ruhr is a rich coal and industrial area of Germany. The French say that they're going to get their reparations by seizing coal from the Ruhr. In response, the German government call for passive resistance, which is where the workers go on strike and refuse to work. However, these workers still need to be paid and to get an income. So what the German government do is they start printing money in order to pay the workers. This is then the straw that breaks the colloquial camel's back, because suddenly there is a lot more paper currency flooding the system and being used to purchase goods and services. This tipped what was already high levels of inflation into what we call hyperinflation, which is the rapid and uncontrollable increase in prices. For example, in late 1922, a loaf of bread in Berlin would have cost you 160 marks. Go forward by 1 year and it cost you 200 billion marks. So how did Hugo Stinnes use this high level of inflation to make money? What he did was he borrowed a load of money in German marks. He then used this money to buy assets, and specifically hard assets. These were things such as precious metal, real estate, and infrastructure. He also had significant holdings in foreign currencies, which weren't experiencing the inflation that Germany was. He was therefore able to pay off these loans with basically worthless money. In fact, the hyperinflation got so extreme that people were even burning paper money because it was cheaper than burning coal. Stinnes also controlled a lot of infrastructure firms, for example shipping firms. This was important because Stinnes was able to transport precious raw resources. These raw resources were shipped to the likes of the Netherlands and Britain, and crucially were paid for in foreign currency. This foreign currency wasn't suffering the same levels of inflation that Stinnes' domestic mark was. He could then exchange this foreign currency back into the mark at a really good rate so that he could then pay off all the loans he had borrowed. He was so successful at this that he became the richest man in Germany and was nicknamed the Inflation King. So how did Germany fix the issue of hyperinflation? Gustav Stresemann, one of the greatest statesmen of Weimar Germany, introduced a new currency, the Rentenmark, in November 1923. He also initiated and signed the Dawes Plan in 1922. This settled the Ruhr crisis, with French and Belgium withdrawing from the Ruhr, as well as renegotiating repayments of German reparations to France. The plan also included $200 million in US loans. This led to what is often called the golden years of the Weimar Republic, where the economy began to rebound and people began to see their living standards increase. At this point, Stinnes could either sell his positions and his assets and reap the reward in the now stable currency, or he could just hold on to them and accumulate the asset over time. The Dawes Plan was later fortified by the Young Plan, which was written in 1929 and came into force in 1930. This further clarified reparation payments and increased US lending to Germany. Of course, the reliance on US loans led to catastrophe in 1929 when the Wall Street crash occurred. This effectively wiped out the whole German economy during the Great Depression. And we all know where this led for Germany. Stinnes never lives to see this. He dies in 1924 at the age of 54 from a gallbladder infection. So that's how Stinnes made his money back in the 1920s. What about today? If Stinnes was alive today, would he be able to replicate what he did then in today's economy? Well, one area of comparison is the fact that actually fiat currencies are more popular than ever. In fact, most of the major world currencies are fiat currencies. They're not based on the gold standard. We have also seen recent examples of hyperinflation, for example in Venezuela. And moreover, there exists today high levels of inflation, with more money in circulation today than ever before. As we mentioned, Stinnes made some of his wealth by trading commodities which had a fixed value that could be sold for foreign hard currency. This is kind of similar to what's going on today, specifically in the oil market. Note, oil is traded in the US dollar. If you're a business that is buying and selling oil, it may be in your interest to retain your earnings in dollars, which could be more stable. You could then use those dollars to buy goods in countries which are experiencing higher rates of inflation, and that would effectively mean you get more bang for your buck. Moreover, hard assets seem to be king again. These are assets that have an intrinsic value. Now, you can debate in the comments whether Bitcoin can be considered a hard asset and whether it has an intrinsic value, but traditionally, we look at stuff such as natural resources, which are finite, but also real estate, infrastructure, gold, silver. Even, for example, with gold, we could argue whether there's an intrinsic value to gold, because silver can be used to construct electronics. Gold is also used in some production processes, but far less readily than silver is. We've also seen huge fluctuations in foreign exchanges, with currencies depreciating and appreciating at rates unforeseen in the last 10 or 20 years. This could facilitate a modern-day Stinnes in acquiring assets for under their market value. So let's look at the example on the board. Imagine you wanted to buy an asset, for example a house, that cost £100. Let's imagine that the exchange rate between the pound and the dollar is £1 will buy you $1.22. I know, I've seen where it actually is now. In this theorized model, if we bought this asset for £100, we would have to pay, if we were paying in US dollars, $122. So we'd have to convert that to pounds, which would cost us the equivalent of $122. There's a couple of caveats here. The first one is to do with inflation. Now, it's all about what we call comparative inflation. So inflation rates in the UK have to be higher than inflation rates in the USA for this to occur. That's just a quick note on what we're saying here. Let's just assume that's true for the purposes of this demonstration. So let's imagine we have those high levels of inflation in the UK, in the pound, but not in the dollar. The effects of that inflation is going to cause a depreciation in the value of the pound. This is because supply is going to shift out to the right to S2 pounds. And let's say this is a significant depreciation. So we mentioned high levels of inflation, which are just affecting one country. Let's say this is rather significant. So we could, for example, see a depreciation to the point where £1 buys you 0.95, so 95 cents. Now, this is pretty extreme. Recently, we have seen the pound drop as low as $1 or thereabouts. However, to be this extreme would be really extreme. But the point still stands. So if we've had this depreciation, we know that the dollar has increased in value. If I, as an astute businessman, had moved my money into the dollar, I would now be able to move it back into the pounds and receive more pounds for doing it. Now, if we wanted to buy this £100 asset at this new exchange rate following the high rates of inflation, we'd only have to spend $95. That means relative to the amount we would have paid before, we would effectively have saved 22.13%. This would be the equivalent of buying this asset at £77.87. Now remember, that's not what's going on. This asset is still valued at £100 because remember, prices are rising, but £100 is £100. It just buys you less stuff. But still, it means you can make a saving. And in the UK, this could be possible. We've seen an abundance of fixed rate mortgage schemes and fixed rate credit schemes, which allow people to borrow money at relatively cheap rates. If they're able to benefit from depreciations in order to pay off that credit at a lower rate, then they could be in a good standing to make quite a lot of money. As always, this is not financial advice. So let me know your thoughts in the comments down below. Do you think if Hugo Stinnes was around today, he'd be making a lot of money right now? If you've been enjoying these videos, also consider supporting my Patreon. You get benefits such as exclusive Q&As and also shout outs. It also just helps to keep the channel running. Until the next video, bye bye.